Welcome back. I'm Pratap here. Today is 1st November 2023. So, before generating today's daily demand and supply zones, let us quickly evaluate the performance of our high liquidity zones generated in our yesterday's report. And this is a HR motor high liquidity demand zone. Because it is already a tested demand zone, we have to look for a deep entry. So, I have found one 75 minutes inside daily demand zone. Again, inside 75 minutes, I found a 15 minutes demand zone, but the price did not enter into this area, so we did not get the entry. And the next stock is BEL, Bharat Electronics. So this is also tested once. That is the reason why we have to look for a deep entry. So here I found one fresh 75 minute zone, but prices again did not reach into this zone. So that means we did not get the entry. Next one is Ultratech. Ultratech is also already tested earlier. But I found one 75 minutes demand zone, a deep inside. Let me go to the 75 minutes. So here we have a drop, base drop. We did not get the entry today. But something I want to tell you here, I'm not comfortable with this zone. What I am thinking next time, maybe prices will easily pass this. Probably it will be violated. There chances are there. Why this is going to be violated? Let me explain. Previously also I explained when a high liquidity zone will violate. Previously, this drop, base drop is already tested in this candle. We didn't find any fresh 75 minute zone except this one, this drop, base drop. When I go to the 15 minutes, I want to fine tune this zone to minimize the risk. So I went to the 15 minutes time frame. Look into this 15 minutes time frame zone. I didn't find any proper supply inside this 75 minutes. Like prices are moving inside this zone. Probably a lot of orders, pending orders might have been consumed here itself. And there is no new 15-minute supply is created. But it is possible, sometimes it is possible, the whole supply might be there even one time frame below. What is one time frame below for 15 minutes? That is 5 minutes. So for that, what I did, I went to the 5 minutes time frame. And here, I found one supply. We have a drop, base, rally. Drop, two base candles. Sorry, it's not rally, drop. Drop, base, drop. It is a drop, base, drop. See the next candle. It easily consumed all the orders again here. So the entire supply, it is consumed. Whatever the pending orders are there in this zone, everything is consumed. So that is my concern. If at all, if you want to look for any pending orders, probably above this blue color area, this small area you may find. But there also we are not finding any zones. Even in 5 minutes, probably I don't know, you may find in 1 minute or 3 minutes time frame you may find or you may not find. So I don't want to take risk in such kind of situation because we have so many other stocks. Why we have to chase this particular stock when we don't have a proper clarity? So that is the reason why I'm not comfortable with ultra cement. I am thinking probably next time easily this zone will be broken, or if institute, because this is a high liquidity zone, there is a possibility that institutions might create again a new supply inside this. Maybe next time when prices reach here, we are not getting an entry, but maybe they may create a new 75 minutes, again push the price down. So at the time, next time again when prices retraces back into that fresh 75 minute zone, at the time we can take the entry. But at this point of time, we have only two possibilities. Maybe one possibility, the prices will easily pass this zone. That means this zone might be violated. If institutions don't want, they may create again another 75 minutes zone. This is what you have to understand. And one more point, many newly joined members, they are asking how to trade with high liquidity zones. Just to help them, I will explain once again in this video. We have high liquidity zones on the daily time frame. The most powerful one is support demand zone and resistance supply zone. That is S underscore DZ is support demand zone. R underscore SZ is resistance supply zone. These two are the most powerful on daily time frame. We have other high liquidity zone types, C underscore DZ and C underscore SZ, but they are very powerful on quarterly, monthly and weekly time frames. Daily time frame also it will work, but it is not as strong as the support and resistance high liquidity zones. And we have another type, counter trend related high liquidity zones. They work very well. The counter trend, especially those who are looking for counter trend trading. That is a TCP underscore SZ and DZ. So these are the high liquidity zones. Most of the time we are focusing on the support and resistance high liquidity zones. So what is this high liquidity zone? What happens? In general, a zone does not work multiple times. A fresh zone only guaranteed, and if it is already tested, there are higher chances of failure. But that is not the case with high liquidity zone. What happens in high liquidity zone? Price enters, come back, again goes, again come back, again goes, again come back. That means high liquidity zones are working like a wall. They are not letting the prices go up further if it is a supply zone, or they are not letting the prices go down further if it is a demand zone. So that means high liquidity zones are acting like a wall. It is not allowing it to go further. Most of the time, the price direction will be changed from the high liquidity zones. Why it is happening like that? There are different algorithms, complicated algorithms it identifies. But the reason behind this is, you may see if it is a high liquidity zone, institutions always create new fresh zones in high liquidity zone. What is new fresh zone? One time frame below. See, currently this is a daily time frame high liquidity zone. In this daily time frame high liquidity zone, when prices get inside, institutions again and again they will be creating a new 75 minute zone inside this. So next time again when price get into that new 75 minute zone, because it is a fresh zone, it is pushing the price down. Again next time when the price enters into that, institutions might create a new supply zone, maybe earlier or again if not earlier now, which is pushing the price down. Next time again price enters, the pending orders in that 75 minutes zone is again pushing the price down. That means each time when prices are entering into this zone, we are finding new 75 minute zones. If it is a supply zone, new 75 minute supply zone we can find. If it is a demand zone, new 75 minutes demand zones we can find. Where we can find? Inside the daily zone. That is the important thing. That's why the daily zone is a high liquidity zone. It doesn't mean you have to trade in the daily time frame. You should not trade in the daily time frame. You should use daily time frame as only a higher time frame zone. Then what is your lower time frame zone? 75 minutes. To minimize the risk inside the 75 minute zone, you will find either 15 minute zone or 5 minute zone. There you will trade because you want to minimize the risk and you want to get the maximum reward. So this is the approach we are following. So here we didn't get the entry, but let me show you the next stock. Today we got a beautiful entry. This is a HDFC AMC, HDFC Asset Management. And this stock today we got an entry, a short trade entry. In our yesterday's list, this is one of the stocks we identified as a high liquidity zone. And this zone has given 11,100 rupees profit during the intraday. This is the intraday profit. And which is 6.8% return on the investment for one futures lot. For one futures lot, it has given 6.8% return on the investment. And the profit is 11,100 intraday profit. Okay, let me explain, especially for the benefit of the new members joined in our channel. I will explain the trade setup. Here we have a drop, we have a drop candle, and then we have base candles, 4 base candles, 1, 2, 3, and then we have a drop candle. That way a new high liquidity zone is created. And this high liquidity zone, how we identified? We cannot identify. It is very difficult for the human to identify high liquidity zone. The reason is the past maybe 5 years data or 10 years data, the system will be verifying the data, and based on its algorithm I have developed, based on that rules it will identify. We can also identify manually also, it is if you follow the rules, but it is impossible to analyze the last 5 years or 10 years data. It is almost impossible. So that is the reason why we should take the help of the machines. Because I already developed the algorithm is able to tell you this is a high liquidity zone. The moment it identified it is a high liquidity zone, you have to take this high liquidity zone as a HTF zone, higher time frame zone. High liquidity zone should not be used for the entry purpose. Then where you have to take entry? You have to fine tune inside a fresh 75 minute zone you have to find. Inside that 75 minutes zone, again you can fine tune to 15 minutes or 5 minutes depending on your trade type. If your trade type is intraday, probably you can take in 5 minutes or 15 minutes. In general, 5 minutes are in intraday trades. But high liquidity zones, even 15 minutes also supports. Because the zone is having a lot of liquidity. So many pending orders. The 15 minute zone will push the price to next 15 minutes zone. Suppose this 15 minute zone is a, say for example, this is a 75 minutes. Inside this, you may find a 15 minute zone. Assume that 15 minute zone is a supply zone. That is your entry. Then what is your target? The next 15 minute zone is your target. And 15 minutes to 15 minutes is a short term trade. In your normal supply demand zone theory point of view, it is a short term, it is a DIT trade, daily income trade. Daily income trade, you receive the target in 2 to 3 days time period or at maximum 5 days time period. But in high liquidity zones, the 15 minutes target you will achieve within 1 day. High liquidity zone is not a normal zone. They are powerful zones. They push the price very fast. That is what we've been seeing for the last 2 months. In all our trades, the price is pushed to the pushed into the 15 minutes target within the same day itself. Strictly speaking, we are executing DIT trades but getting the returns within the intraday itself. Because we are getting the returns in the intraday, we are calling it as a intraday trades. But strictly speaking, there are all these days, whatever the trades we are executing, they are DIT trades, daily income trades, getting the return on the same day itself. So that is the power of the high liquidity zone. Let me show you, the same thing happened in our yesterday's trade, even today's trade also. Our target is at 15 minutes only. But during the intraday itself, it is reaching the target. Okay, here we have a daily high liquidity zone. In order to take the trade, you have to go to 75 minutes. So let me go to the 75 minutes time frame. In the 75 minutes time frame, we have a fresh 75 minute zone. We have a fresh 75 minute zone. But after that, you know what happened? Prices went down. Next time when prices are traveling towards the 75 minutes, what institutions has done? They created one more 75 minute zone at the edge of this daily zone. We have a rally based drop. And again, this 75 minutes itself is a high liquidity zone. This drop based drop is a high liquidity zone. That's why it is holding the prices. First time, second time, today third time. So I told you one thing. If there is any 75 minutes high liquidity zone, it is very difficult to break this zone. That's why, because it is a high liquidity zone, you can take the trades. But the condition, what is the condition? You should not use this 75 minute zone for entry. You have to use this as a HTF zone. So then where we need to take, go one time frame below and define your trade. So I went to 15 minutes time frame. In this 15 minutes time frame, within this 75 is also a high liquidity zone. But I didn't find any proper supply here. Are you able to see any supply here? No. In 15 minutes. If there is no supply, you should not leave it. You have to look for one more time frame below. Check if you can find any, because sometimes institutions may create a supply even further lower time frame. So that's why what I did, I again went to the 5 minutes time frame. Now look into this. We have a beautiful rally base drop. Excellent. And this supply is the main supply for this entire 75 minute zone. Actually, this is the reason behind forming this entire 75 minute zone. But this is the origin. Always you need to touch the origin. You need to reach the origin. We have reached by doing top-down analysis. From where we started, daily time frame we started. Then we went to 75 minutes. Then we went to 15 minutes. Then we went to 5 minutes. There we find the origin for this entire move. See, prices reached up, up, up. And the reverse happened from here. And this is the origin. And finally, it pushed the price down until this location. After that, again, prices moved up. But from here, how it pushed the price until this area. But this is the main reason. And one more thing you have to observe. After this drop, you have a base candle and you have a drop candle, but this is not good enough to qualify as a leg out. but prices moved here. What are you observing in this area? One important point you have to observe. See the rejections. Let me draw the line here. See the rejections. Prices are not able to go beyond this blue color line. That means the real order flow is started from here, just above. Already we have a zone. Which zone? The 5-minute supply zone, which is inside the 75-minute zone. And this is not only a 5-minute supply zone, this is also origin for the 75-minute supply zone. And moreover, when prices are entering into this zone, it is holding the prices for multiple times. High liquidity zone does not allow the price go beyond that high liquidity zone. So this 75-minute zone is acting like a wall. It is not allowing. If you throw a ball into the wall, what happens? Throw a ball into a wall. Again, the ball will come back towards to you. Exactly the same way, the prices are hitting and going back. Again hitting, going back. That is what happening here. See here? This is one hit, came down. This is another hit, came down. And first time when there is a hit, does it reach the real origin? This is the actual supply. Lot of pending orders are there here. The majority of the orders they placed here. Of course, they placed even below also. But prices are not going beyond this blue color line. This is the first hit. Assume this price is like a ball, you can imagine. And imagine this high liquidity zone is like a wall. See how it bounced back. Again second time there is a hit. See how it pushed. Now institutions created a new demand zone at 15 minutes level. This is a 15 minutes demand zone. And again they pushed the price up. Now what happened? Because of this fresh 15 minutes demand zone, at least now the price is moved, just crossed this blue color line, but all the pending orders, the moment it reached the proximal line of this demand zone, it pushed the price down. Even this 15 minutes demand zone is also broken. That is a different story. But what I am trying to tell, the power of the high liquidity zone, how they push the price. Why we are getting more return during the intraday itself? Because high liquidity zones are acting like a wall. If your price is like a ball, the moment you throw the ball towards the wall, how fast it will push the ball towards you? Exactly the same way the price is also pushing down the moment it touches. So it just reached this 5 minutes supply zone, and then prices reached into next 15 minute zone. See, all the next immediately available 5 minute zones are broken. This is one 5 minute zone is available here. It is broken easily. Finally it reached. When we got this entry on this candle, we got the entry. That is at 9:40. 9:40 today at 9:40 we got the entry, and when it reached the target at 1 o'clock it reached the target. At 1 o'clock 5 minutes candle. And it has given 11,100 rupees for one future slot. This is the profit during the intraday, which is equivalent to 6.8% return on the investment. That is, if you are comparing with the cost of the future slot, cost means the margin amount for the future slot, and your price, when you calculate, the return on the investment is 6.8%. So excellent. We have already seen our average intraday return for high liquidity zones is 6.1%. It gave a little above 6.1, that is 6.8% return we got. Same thing we have seen even yesterday also. Same thing we have seen even day before yesterday. Check all the videos for especially for the last 1.5 months. we've been experiencing. We haven't seen any failures. We have seen two high liquidity zones broken in between during the last week. But we didn't take an entry because we didn't find any fresh 75-minute zones. Because we have a rule, if there is no fresh 75-minute zone, we don't take the entry. When there is no fresh 75-minute zone, we know that the high liquidity zones will be easily broken unless institutes create again a new supply zone inside that or a new demand zone inside that if it is a demand zone. For those two stocks, institutions did not create. Maybe they don't have interest. And there are no existing fresh 75-minute zones, so easily broken. We didn't take an entry. That means we know when a high liquidity zone will be broken. We know the rules. We know when we have to take an entry, when there is a fresh 75-minute zone. If the 75 minutes zone is not a fresh, still if you want to take, that 75 minutes should be again a high liquidity zone. That is what we have seen today. This 75-minute supply zone is also a high liquidity zone. That's why it supported multiple tests. Because it is a high liquidity zone, what we did, we changed our approach. Now this 75 minutes zone is a high liquidity zone. Now we are treating this 75 minutes is a higher time frame zone. Previously, daily zones are high liquidity zones. That's why we treated them as a higher time frame zone. But now 75 minutes is also high liquidity. We treated it as a higher time frame. Then what we did, we went one time frame below, that is 15 minutes. Because 15 minutes in this particular zone is not having proper clarity, we went one more time frame below. There we found the actual origin. This 5 minutes is the actual origin. This is the one responsible for this entire zone. Today price reached to that zone. Just about to reach, again it pushed. There is a rejection. After that, see the push. And this push has given 11,100 rupees profit with return on investment 6.8% during the intraday. At one point of time, I thought it is even about to reach the 75 minutes demand zone. Let me draw. So this is a 75 minutes demand zone. At one point I thought prices are reaching, but just a few points above this zone, again there is a push. Otherwise, we would have got even your short-term return also today. Yesterday, you have seen in yesterday's stock, that is Indigo. In Indigo, same day we got intraday return, we also got short-term return, that is on 75 minutes. I thought today also it is happening, but just before, maybe tomorrow it may reach. Anyway, that is a different story. But did you understand now how to trade with high liquidity zones? So let me summarize once again, in case if anybody is having confusion. See, any high liquidity zone should be treated as a higher time frame zone. Because we are generating daily reports for our reference purpose. So what we are doing, we are referring high liquidity zones for our trading. So you are not taking your daily zones as a entry point. What we are doing, from daily one time frame below we are going. So one time frame below for daily is 75 minutes. In the 75 minutes, we are finding fresh zones. Suppose this is, forget about this zone where we took the entry. Assume this is your fresh 75 minute zone. Here you take your entry. But if you feel this risk is high, what you do? You go to one more time frame below, that is 15 minutes. Here you will fine tune again. How you will fine tune? Something like this. Supply zone. Okay. So we have a rally candle. This is a failed ERC candle. Failed ERC candles can be used for leg-in purpose. If you are not aware of what is a failed ERC, I explained in the first lesson. The part 3 of first lesson I explained what is a failed ERC. So you can go through that lesson from our training program. So we have a failed ERC candle as a leg-in. Then we have base candles. Then there is a drop candle with gap. We have a pro gap here. So why we have fine tuned? Because you are not in a position to accept this risk at the 75 minutes. So you want to minimize. So you want to take entry only when prices enter into this 15 minutes area. So that way you are fine tuning to minimize the risk. But it should be a fresh zone. That is the rule. The rule is wherever you are taking the entry, that should be a fresh zone. Unless this is also a high liquidity zone. If it is a high liquidity zone, you may accept second entry or third entry if the risk is within your limits. If the risk is not within your limits, again you go one more time frame below and then you will fine tune. Today that is what we did in this zone. This 75-minute zone, I am feeling this is the risk is high taking an entry here. That's why I went to the 15, but 15 I didn't have any clarity. So when I went to 5 minutes, there I found the origin of this entire move. Origin always works perfectly. Origin means that is the place where you have the actual institutional pending orders. The majority of your institutional pending orders. That you can find only by doing top-down analysis. By fine-tuning the zones, you will be able to find. And finally, see how fast prices came down from here. Again, it was trying to go up, but again pushed. Finally reached our target. So this is what you should understand about high liquidity zones, especially the new members who are attending this lesson first time. Please, this is the way you need to do your trade with the help of high liquidity zones. So as a summary, high liquidity zone is an area where institutions again and again and again and again and again, they will be creating new zones. Where they are creating, at lower time frames they are creating. If your daily time frame is your high liquidity zone, they are creating new zones at 75 minutes level or 15 minutes level. If 75 minutes is not having clarity, you can find at 15 minutes level. And those fresh zones are again, they push the price down if it is a supply zone, or it will push the price up if it is a demand zone. But what we are thinking, because the same zone is again it is testing, we already fixed a rule. Somebody told you, a fresh zone only you have to trade. So our mind tells because this is a fresh zone, we cannot take a trade. But the person who provided you the training earlier, he did not tell you. Go to the lower time frame. There if you find a fresh zone, again you can take an entry. That point nobody told you. Because they didn't tell you, you fixed in our mind. Okay, daily time frame is already tested, leave it. But you have to do top-down analysis. Daily time frame is tested, okay, we agree. But go to one time frame below 75 minutes, there you will find the fresh zone. That fresh zone will work. Why it is working? Because your higher time frame daily zone is acting like a wall. It is not letting the prices go beyond your high liquidity zone. This point you should get clarity. You should not fix in your mind, my daily time frame is already tested, leave it. Your daily time frame is tested, I am agreeing. But inside you find a fresh 75 minutes zone. Or inside you might find a fresh 15 minute zone. Which is the origin for the entire move here? In today we have seen this is a fresh zone, the fresh 5-minute zone which is tested first time today. This is the one tested today first time. Today only it is tested first time. Even it may give next time also if it may go a little deep and again it will push the price down. I am sure this 5-minute zone will also work for second time, next time also, because this is a high liquidity zone. So this is what you should understand about high liquidity zone. When I say daily high liquidity zone, don't think from daily point of view. You have to go to one time frame below. Definitely you find fresh zones again, you will be finding, because institutions are again, they are creating inside the high liquidity daily demand zone. Why they are creating only inside that high liquidity demand zone? Because this is a high liquidity zone. That's why it is a high liquidity zone. Because institutions always they have some calculations. But our algorithm is able to find that. If you are thinking in a normal way, you don't find such kind of zones. You never know. You might be thinking it is already a normal demand zone which is tested second time. So maybe it is a weak zone. You will be thinking like that. If algorithm did not identify that zone as a high liquidity zone, probably there are higher chances if it is already tested. That is possible. Or it will work again, that is also possible. Because at present our algorithm did not identify. Maybe in the next iteration, our algorithm will understand it is a high liquidity zone. That possibility is algorithm works in two ways. Our algorithm identifies fresh high liquidity zones, and our algorithm may not identify a high liquidity zone when it was fresh. After some price action in that particular zone, then our algorithm will recognize both the conditions I have included in that. During the fresh zone, sometimes it will miss our algorithm because certain other conditions did not satisfy. That's why our algorithm is unable to recognize that as a high liquidity zone. But after certain price action, at latter point again our algorithm, initially it might have shown our algorithm might have shown the zone as a normal zone. But after certain price action, our algorithm, based on that price action, it will decide it is a high liquidity zone. So both these conditions I have defined in the algorithm. So anyway, that is not important for you. What is important? How to trade with high liquidity zones. That is what you should understand. Hope you understand. Now let's move on to our daily demand and supply zones, and we will generate them. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. This is the filtered list. So 14 stocks are near to the daily demand zone. So we have Nifty Auto, having a high liquidity demand zone, near the high liquidity demand zone. Even yesterday's report also identified the stock. Because today's market is moved in a small range, most of the zones are not triggered. This is a counter trend setup. We are not focusing in our discussions because you should have idea about these concepts. So without knowing, we should not trade on these zones. Any other high liquidity zones? Today you are seeing a new type of the high liquidity zone. It is a counter trend trade related. Just ignore it, time being. Without knowing all these concepts, you cannot focus on these zones. This is also confirmation trading related zones. So our main concentration is S underscore DZ. So here we found HDFC AMC is already we took a So today we took an entry on this zone, that is counter trend trading. So HDFC AMC is having both demand and supply zones as high liquidity zones. So, you know what happens when your demand zone is a high liquidity zone, supply zone is a high liquidity zone. For some time, the prices will be moving within these zones only. So you will get multiple trading opportunities in such kind of stocks. And the next one is India Mart is also a high liquidity zone and it is a fresh zone. And what else we have? This is a confirmation trading, counter trend confirmation trading. So it's created today? No. And that's it. So these are the high liquidity zones. You have to focus on India Mart, you have to focus on HDFC AMC, sorry, not HDFC. So this is about the demand zones. Stocks, all these stocks are near the demand zone. But mainly we are focusing on high liquidity zones because they are giving us a good success. For the last 2 months we have seen all our trades, more than 40 plus trades, maybe it could be 45 or 46. We have seen only 2 stocks are stopped out. Remaining all gave a good return. And those 2 stocks stopped out, we got a very minimal loss. The risk was very minimal. Okay, now let's go back. For entry time frame daily, let us filter the stocks which are near to the daily supply zone. So this is the filtered list. Only 4 stocks are there. Is there any high liquidity supply zone? No. None of these stocks are having high liquidity supply zones. We have only demand zones. So let's go back. Entry time frame is daily. Let us find the stocks which are closed inside the daily demand zone. All these stocks are closed inside the daily demand zone. So I'll keep on scrolling this list and you have to pause the video and you have to look into all these parameters. One more point I would like to tell on every day, but I forgot. Every day I forgot. Before the video, actually, I'm supposed to tell this point. See, when you are referring these reports, it is always advisable to, what to say, it is always advisable to watch all these reports from a bigger screen, at least laptop. If you are watching these videos from the mobile phone, because these reports are having too many parameters, they are not visible from the mobile phone. And another thing is, you have to keep at least 1080 pixel resolution. In the YouTube, you need to set 1080 resolution, that is HD resolution, right? Because if you keep 720 pixels or 360 pixels, 360 or 380, 360 pixels, probably the text, you see a blurring text. If the text is blurred, you can't read these reports because these reports are having too many parameters. So that's why my request is always watch the videos from at least from laptop or even bigger screens. And the second request is keep your YouTube video resolution to 1080 pixels. You get complete clarity on this report if you follow these two rules. Every video in the description I mentioned this point, but I don't know how many of you really read the video description. And before the video I want to tell this point, but every day I forgot this point. Okay, this is about the list of the stocks closed inside the demand zones. Focus on the high liquidity zones. Give him first importance to the high liquidity zones. Then as per your supply demand zone concepts, as per your experience, you can focus on the other stocks. So total 42 stocks are closed inside the daily demand zone. So let's go back. For entry time frame daily, let us find the stocks which are closed inside the daily supply zone. So this is the filtered list. So total 19 stocks are there. So let me go back. For entry time frame daily, let us find the tested zones, daily tested zones. So these are the demand zones, tested daily demand zones. So total 22 stocks are tested today. 22 demand zones are tested. Which demand zones? Daily demand zones. So let's go back. For entry time frame daily, let us find the tested daily supply zones. So these 10 stocks are tested. So let's go back. For entry time frame daily, let us find the newly created demand zones. So these stocks are having newly created demand zones. These 8 stocks are having newly created demand zones. So let's go back. For entry time frame daily, let us find the stocks having newly created supply zones. So these 15 stocks are having newly created supply zones. So this is about the filtered list. Now I am generating a complete list of demand and supply zones for all the 201 stocks for your reference purpose. Entry time frame daily, I am not setting any filters and generating all the stocks. So in this list, first 17 stocks are having, first 17 stocks are index related stocks and remaining are equity stocks listed in future segment. I will keep on scrolling this list. Whichever the stock or wherever you want to refer, there you please pause the video and then you can study the parameters. So this is the end of the list. I hope the information provided in this video is useful to you. And let us meet again in our next video. Thank you.